So, okay, suppose yes, super, super. So, let's start. Let's see some. Today we make a view of what's happening in the week, and it's time for backtesting also. So let's see about this is the daily bias. Okay, so we have Monday, Tuesday, Wednesday, Thursday, Friday. Um, as you can see, I send always. I mean, not yesterday, but normally I send the daily bias, and it's very easy to get. Also, you can use it by the weekly bias. So when we start Monday, the best way to check what it's a high probability to do is when you come from weekly bias, right? So what do we have here? We have fair value gap, right? We have our reaction in that fair value gap. Wait, okay. And then if this fair value gap, I will record it. I will send. Don't worry. Okay, if we have this fair value gap, that means that what? Internal range liquidity. So we go to find what? External range liquidity. This is our first draw of liquidity, and we don't have anything here. So this is our second. And in the last point, we find here this small fair value gap. So this will be our third fair value gap. But the most important one is this one, the external range, internal to external. So you don't need to target here. You can do if you want, but you don't need it to target because this is the safety. So we go then in a daily time frame, and we got what? Okay, we are here. We got this. So now in daily, we got a new external range liquidity because we come from this one from here. Again, this is our internal range liquidity, right? We sweep, and what we got? This is Thursday, the last week, Friday, and then Monday. Okay, here's important to know. Monday usually is a range, and what I mean by range, I say something like that. Also, Friday is must to be a range, not normal, but it could be a range. It, don't be so strict about it, but normal is a range also. You need to think uh, the week works sometimes work like that. Okay, so we got Monday, Tuesday or Wednesday, Thursday or Wednesday, and Friday. Okay, so normally we expect in Monday some kind of um, range, and the Friday also. So it could make Thursday, Tuesday, or Wednesday. It could be the high of the week or the low of the week. In this case, it's the high of the week. If we have that Wednesday as high of the week, we expecting Thursday it could do like this reaction, or if we have Tuesday the high of the week, we could expect like Wednesday it make that reaction, and then the other day is Thursday it could make the low of the week. So if we have that already, then we can say again, okay, we have internal range. So we go through what? External range. Okay, we start here, Monday, Tuesday, Thursday. What we have? We sweep the liquidity. So, sorry. Wednesday we sweep the liquidity. So Thursday it could make two things. When we have these things here, we could have two kind of reaction. We could keep up, I mean following to the uptrend, or it could make what we expecting actually. It's come to make some kind of reaction in the internal range liquidity and go to sweep the external. We can come here and see, okay, which one is the next liquidity. So this one is the next one. Do we have anything else? Actually, we have here. Let's see, weekly. I mean, this the only it could make some kind of reaction here is 50% of this propulsion block. We could have this, but yeah, we could have that reaction there because actually we go in weekly, we go bearish, okay? So what I'm expecting to see some reaction here. So we go over daily again, and we can say, okay, Thursday could go up and go down, or it could go down and then go up. But what I am expecting is this one, okay? First come down because we have a liquidity. So that's for me. I'm always try to sell after this kind of movement because we don't have anything here. So and what Thursday do? Just come inside, and now you know you can buy again. Then boom. Okay, so how you get that approach? I mean, even if you don't know what's going to happen here, you don't need to trade those days. I mean, it's not necessary. You don't need to do it. For example, let's think we are here in this day, Thursday 8. Let's move back to here. So we have that. Notice that you say, okay, we sweep that liquidity, so we expecting go up. So when you come to your trading area, to your trading time frame, okay, let's pass Monday, that's Tuesday. Okay, you say, okay, I need to come here, right? Because in daily bias, I'm going to buy. And also what I have here, I have this kind of market maker sell model. And then we are starting in the market maker buy model. So what do? We hit the sweep, we do the same. This is buy side liquidity, and we sweep this sell side liquidity. So now you can say, okay, I can go inside and I can see if I have something to buy until here. So we can come to 3 minutes. We see this. We see this. We have short term, short term, short term, fair value gaps, and this comes in a intermediate term. So we have this breaker, and it comes and taps. Okay, this even is normal. We have this. That's even is normal. It's okay. Why? Because we are in a day with a range. This is a very difficult day. This is Friday, I think. Yes, this is Friday. So it's a range. You don't need to trade that. You don't need to trade it. You don't need to trade it because it's like normally it's like a seek and destroy because he goes on two sides. I mean over two ways, go up and down. Then okay, but even you don't need to change your mind. I mean, you don't need to try to change. Okay, I take this, then I want to enter there right now, going down. No, because if you try to enter around here, it's not the hype of probability trade. I mean, you need to go over higher probability trades. Now, how do you do that? Okay, if you know daily is bullish, then you need to wait 1 hour and 3 hour and 3 minutes, or the time frame that you need. It becomes bullish. If you have, for example, daily bullish, 1 hour bullish, and your entry time frame bearish, this is not high probability trade. Even if it's almost 80%, that is not high probability trade. You don't need to sell. If you in, daily bias is bullish and you have 1 hour bearish and you see some entry time frame, daily bullish, 1 hour bearish, and 3 minutes for me, bullish, that's not high probability trade. So you don't need to go in. So what do we need to see? We need to wait the moment, the right moment for change. So we have here the same. We could see something. I can see any kind of internal liquidity here. I mean, all this is internal liquidity. Yeah, you could say, yeah, right? But I don't think it come here. But you could expect it and see some change. Let's see. We have those sell side liquidity there. So bam, yeah, it took it. Then now we have some kind of idea. We can back again. So it's probably, here is 2 p.m. We have the change here. We have the breaker block here. This is our POI. And what we have here? This is our doll, our 1 hour doll. So we don't have anything there. It's not tapped in yet. So when the market comes, you could try to trade off of there. Well, that is 8 at night. I don't trade that, so. That's Asia. Okay, that's a stop again. Again, as I say, Friday, bad day to trade. That's at least for me. As you can see here, it make, well, that's here, this one from here. It make that range. So we have Monday. Monday again, bad day for trade. You can trade, yeah, I trade. I use it, but I trade in scalp. So for me, it's easy to scalp there. So again, easy. Don't need to. I mean, we are here, right? In 3 minutes. Where I marked that. Okay, I marked this one here in the break. Where is the break right now? This is the break. Okay, so even here, you're still in the trade, just 7.2, 2-year draw of liquidity. It takes all night, yeah, but even is work. Okay, but as I say, it's a very bad day to trade. Also, I don't. I mean, if you are trading euro or trading EU or trading, I don't know, gold or something like that, just forget about. If you want to trade in Asia, you go over the yen, go over the UD, Australian dollar, New Zealand dollar, all of this, but not in EU. So again, as you see, we got this. We reached this already. Our sweep of liquidity in 1 hour. We reached it already. Not yet. So we go. Okay, Monday. Again, which one is our bias? We have a bullish bias. So we got that entry here. So what we can do? We expect we have that sweep of liquidity. We have that sweep of liquidity, right? So we need to target what? This one, all of this. All this is liquidity. Bam. So if we are here, for example, let's mark here. We start here in Monday. As I say, it's very difficult trade. I mean, it's usually it's a range, so I don't try to trade so much. So what do we have here? Sweep of liquidity. Do I need to enter here? No. Why? I mean, you could entry, but it's a risky because which one is the target? This one. So if you want to enter here, you need to know you're probably gonna target those liquidity from here. You don't want to spend, I mean, you don't want to wait that spend the long movement. You need to focus on, I think I take that one. I don't remember too. You see? I mean, close target. You cannot do, you cannot expect it to come even below Asia because the overall bias is what? Is bullish. So if your overall bias is bullish, you don't need to trade, even you don't need to trade it, but if you catch it because you are a scalper, and that's okay, you need to know is 1, 2, 3, or like this in here. Why? Because this is the high probability trade. Okay, let's go 1 hour again. We still need to go here, right? And let's go to 1 hour, to daily, sorry. We have here this, right? And I must say this one from here also, because the only thing could stop us is in the 50% of that week. That's a rejection block. So now we have a target, okay? But that's high time frame, so 1 hour. We don't reach any of this. I mean, we didn't tap it yet, so we can expect that kind of entry. Then, okay, we don't sweep anything here. You could trade. I mean, you could go to 5 to 15 minutes if you trade in 15 minutes. We have a sweep of liquidity here. I mean, I don't go to 15 minutes right now. What we have? So we have this one here, sweep of liquidity. Then boom and go. So we have 1, 2. Let's see the next. That's what I mean. That's why I don't go to 15 minutes. Okay, now what we have? Buy side liquidity in what? In high time frame, 1 hour my high time frame. So after we have this, do we tap this one? No. Well, yeah. We create what? Equal highs. Tapped here. Again, you could enter here. Yeah, you could enter here. But that's against of your trend. That's against of your daily bias. So that's not high probability trade. Let's see. We sweep this liquidity. You can come 5 or 3 minutes as you wish. I trade in 3 minutes. And then you're going down. What do we have? We have that breaker block. It's the nearest liquidity we have. Also, we have this those fair value gap. And then we don't have, the only entry we have here is the unicorn entry, is this one from here. And then you have what? 1, 2, 3 in a row. And that becomes your liquidity. This is the unicorn entry. So you could say, okay, I could take this until those liquidity. But remember what? It will be kind of, normally I put here. Is that good one? Risk entry, risk reward? Risk reward? I don't like so much. If you are risk, you could put it here, or even in the top of the breaker block, something like that, and then it's a good one. But this is the entry here. That's unicorn model to entry. So you could trade, yes. Is the highest probability? No, because normally the people don't trade in this point of here. The people wait to this. They say, okay, we have internal range liquidity, and that is my entry point. So after that, the market going up and say, why? That's what's happened that I have supposed that a strong high it's supposed to hold, and that I have IDM here. So why it didn't go down? First, because they are not in the right direction, because they don't follow daily bias, and then also because uh, actually that's the idea. They are not in the daily bias. They are not in the high probability trade. So that is a trade, yeah, for scalping, but not it's a high probability. So which one is our high probability trade? It's this one from here. Actually, it's this one from here. Why? Again, we are in a bullish market. We sweep this liquidity. We have that stop hunt, and we go over this 1, 2, 3. So what we can do again? That is 4 a.m. That is New York time is open, I think. And then we have that expansive movement, as you can see, faster. Then we can mark what? We can mark here our breaker. We can mark our internal range. We have also fair value gaps. And boom, yeah. This fair value gaps is a first. Again, this is Asia. That's why I'm not trading in New York first, because I just don't do anything here. I mean, I'm out. And the second one is because of, if you take, I mean, for me this one is already done. I don't need to trade this because this is my first target. So I don't trade that. So you will see me trade always in London. So again, our target, what is our target? This one from here, right? We reach this one. We are now in Asia from Tuesday. So probably also you need to see what? You need to see the news. Probably we have news on Tuesday, and that is a good day. Let's see if I can find it here. Here, what? Okay, here it is. European Union. Okay, PPI. Here it is. What's that one? So again, the same. We go to daily because it's a new day. And where we are here. We see this. But in daily, our I mean also I think we sweep this. We have this one still. This is the only reaction we can get in the middle of in the 50% of the rejection block. So we are not tapped in there yet. So we expecting go up. This is not exist yet. And yeah, you see here, That's the idea. The only thing I don't like here is we are not moving with powerful movement. I mean, we are not seeing nothing of this. I mean, I like to see some of this. That's vacuum block, that fair value gap. I mean, but not vacuum block. Yeah, this one is I forgot the name. But yeah, I don't like to see this price action because for me it's very messy. But it's because what? It's because it's waiting for the news. So again, we see here in 1 hours how it reached the liquidity, and now is the moment. Again, you could trade this one. Yeah, you could trade this one actually. As you see, you say, okay, I'm gonna trade in London like I do. What do we have? Sweep of liquidity. One, two, okay. This is a good trade, right? We have here, accumulation, manipulation, and then which one you could trade here in this breaker block, okay, or you could trade here when you break here in this mitigation block, or you could trade here in this fair value gap. Okay, what is my target if I'm here? I take 1, 2, 3, no fair value gaps, all those for liquidity. I mean, for me, it could make until here. I could trade until there because this one it could have some reaction. Because we have what? Rejection block. It tapped the 50%, no it didn't. So it could have the reaction there. So for me, it's from here, it's good enough. So you could trade over all those movements. It's very nice price action here. Again, you could trade here and a mitigation block. So what? How many you have? 1, 2, 3, and if you tap this one. But this is even if you trade like that, that's not high probability trade. So you need to know that's it's a risky trade, even if you get that kind of movement. Why? Because my daily bias are still bullish. So once we reach downs here, and that's happened in 11 in the morning for me, you could go there like lower time frame and say, okay, so we have that sweep. Also, here for me, and then you need to find the area where you want to reach up. So what do we have here? This is very messy price action. The only thing we have is this candle here. Okay, but you cannot put your entry here like that. I mean, you could do it, but it's not a smart way to trade. I put them over here, and then you could reach over that. That's which one is the? Let's go to 1 hour. Those here, it will be your draw of liquidity. You could trade that. High risk reward. Okay, no, I don't like. So let's go. Let's try to go over the other one. I mean, you can expand in here to take 1 to 2. And then just tap and go. Boom, just the reaction, and boom. That's what you need to take this one like this. That was in, let's see, when I enter 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. This is very fast moving actually in 3 minutes. Let's see in 5. See, okay, is 1, 5, this 5, 10, 15, 20, 25, 30. In 30 minutes, you target your first TP. So after that, you take the second one. And you see, as you can see here, how faster it made. So that's what we need to trade. I mean, if you wait for the right moment, then you'll be able to trade it without risk. You want to trade like a scalper, okay, you can do it. Also, it's okay, it's a good way. That I mean, like I do every morning. When I don't see anything clear, what I'm doing, I come to my daily bias and I say, okay, I have my daily bias. My daily bias is bullish. Okay, I have this. Let's remove this one here. My daily bias is bullish. My draw of liquidity is also bullish. So in 5 minutes, in 1 hour, I am bullish because my draw of liquidity is, I sweep here, I come to here, and I come to 5 minutes, and I try to catch this movement from, let's see if I can find one. Okay, this one from here. I sweep this, then I wait the reversal. I don't get nothing here. I don't have any movement here actually. This is plus. This is the C, the PPI. But actually I do like that every morning. For example, if I want to trade this one, I could trade like here. But I don't do it here because it's not my high probability trade. Let's see the time. I mean, I use the sun model very often right now. Probably here. Let's see if I can find some good example for you. So if I go bullish, then I sweep, I have my stop hunt, I go to 1 minute, and this is my moment to entry here. But in the 50%, 1 and 1, and it's faster, boom. So why? Because you could do here, also you could trade until here because you have this one, you could trade that, but as the model says 1 to 1, this is for very fast entry, very fast out. So, but is that a high probability trade? Yet it is, because in 5 minutes I sweep the liquidity, and in 1 hour I have my draw of liquidity here. Let's see. Yeah, this is my draw of liquidity here. And in daily, I am bullish. So don't try to take the things against the trend. It's easy for all of us, or for all of you, if you try to trade, follow the highest probability trade. I mean, don't need to entry in every time. Just wait. Be like Hunter. Just wait. Wait the perfect time. So we got this. Okay, once we sweep this, we could say, okay, we expect some kind of reaction down because we don't have this one, right? Let's see in this day. Okay, in the first part of the day, we are still what? We're still bullish, right? But we already know today is what? Wednesday. It could make the reversal day. So we could not go longer forever. I mean, we sweep the liquidity in this first part. We have here, when the Asia start, we have those external are and sorry, external again. So we sweep the internal in Asia. We don't expect to going down again, not today at least. Why? Why? Because we already sweeping here. Again, sweep of liquidity. So first target is taken in Asia, the second one is in London. So if we go here, for example, we don't have anything to do, I mean not in this trade, you could start to find something here gains because you already sweep the liquidity. But as you can see, we don't have anything. This is the first idea to going down, and after this we have the second one here. But for here we could trade like I trade. Use what? Use the some model. I don't have anything. This is my sweep of liquidity. Okay. So if this is my higher time frame sweep of liquidity, this is my draw. So I still go bullish. So the only moments I have here to go to entry, okay, you could entry like continuation here or here, okay. But for me, in this case, if I use, I mean, you need to choose what kind of model you want to go over. Okay, in this case, I use just some model to entry. So I will see here, sweep of liquidity, I have that stop on. I come to 1 minute. And as you can see, I don't get any kind of entry here. It's never resharp because it's give you here. So I expecting go up, go down, go up. I expecting some go down again, but it didn't take it. So this is let me out. So it's okay. If you cannot enter, it's okay also. I mean, that means you need to take every single trade. That's impossible. That's totally impossible. So as we see this one, we notice here we don't have, again, let's go to 5, 5, 4, 3 as you wish. We notice here we don't have any clear movement down. It's not powerful movement, just this one. But this is a sweep of liquidity because it's caused by a wick. So we go to 1 hour again, and after this sweep of liquidity, we could say, okay, let's go again. And what do we have? We don't have any break, no breaks. This is our break from here, from here. So we could expect some things. We could expect some reaction in the breaker block, right? Or in some part of the fair value gaps over here. All these are liquidity, but it's already done here. So notice this, what we know right now. Okay, we have two things. We have, and here we start again. What we're talking about in the beginning. What's that? Fair value gap. So we can go down and up, and or we can go up. For me, after see this kind of candle, this is reaction candle. So after see this candle, I expecting that reaction going down. And we already know going down and then going up. Let's see 1 hour. See going down, tapped in, and give us this. As you can see, this movement is very, very similar here. Powerful movement. Again, powerful movement. So again, do you want to trade here? Yeah, you could even, I mean, in this case, if you want to trade bearish, guess what? It's right. You are in the daily bias. This is your daily bias. So it's okay to trade off of. From this, let's see, Asia goes. Okay. You could trade downs. Which one is your TP? All of this. Actually, this is your POI, your point of interest, your point of liquidity. POI is not just OB. Also, every point of liquidity is your POI. So this is your target because you don't know what's going to happen here. So if you want to trade off of, you can do it. Actually, you see, boom, that's faster. I don't think you have time here. I mean, if I'm 5 minutes or 15, probably. But I don't trade that. You sweep here. 1 hour. Then if I go to 3 minutes, I have this break here. This is mitigation block. And I have here this verbal gap. So around this it could be the entry, but it's very messy price action because it's get some liquidity, it's engineer some liquidity. So also it's news for sure. What times happen? 2 p.m. I don't see anything. I can see anything here, right? Okay. So that's the way. I mean, you could choose any entry type. You could choose any entry model. You could choose, for example, Sun's model. You could choose Unicorn. You could choose Breaker. I mean, order blocks entry models. You could choose even uh, range entry models. You could choose everything you want. I mean, that's not the point. The point is to go in the right direction of the market or in the highest probability direction of the market, and that's what you need. I mean, that's the highest probability trade. And you could change this also. I mean, for me, daily bias is important. It's a higher time frame, or weekly is important because it's the highest probability move. But you could trade from 4 hours to 15. I mean, if you are in 4 hours, let's say we got this, and we say, okay, we have 4 hours is my, let's say, higher time frame. We are bullish, right? So which one is our direction right now? We need to sweep what? We have this, is sweep this internal range liquidity, go up. So we took our external, so now where is our internal range liquidity in 4 hours? This one here. So after sweep external, we go to internal. And if you are here, this is Asia, I think, something around here. But if you are here, let's see. Okay, here, yeah. You could come to 15 minutes, or you could come to 5 minutes. And again, it's the same. You could trade from your higher to your lower. So your lower time frame needs to be bearish in this case because your higher time frame is 4 hours, and you need to go 4 hours is bearish. So now in 15 minutes or 5 minutes, you need to go bearish. This is your high probability trade. Then what do we have here? Okay, we have this sweep of liquidity. Okay, we range this one. We need to find our internal range liquidity and trade off of. Actually, The trading is from liquidity to liquidity. As you can see, finally it's going down. It's going down. But you see here, this is messy price action. Probably you don't want to trade this. So what we have, okay, what do we have? Clear price action. What do we see here? We can go 4 hours again to understand why. Okay, we don't sweep down. We must sweep faster here. We don't sweep down, go up, go down, equal lows, sweep here. Okay, don't go down, sweep here. Why? Look here, fair value gaps or propulsion block, as you want to say. It's the same. It's an order block again. So now we can trade. We could trade downs into what? Into here. This is the last point. Okay, let's say we are not here. We are around this area from here. We know we go what? We go bearish, right? Okay, let's say that is our intermediate time frame. So do we sweep this one? We could trade that. It's not high probability. You could do it for sure. You can come to 2 minutes, 1 minute and trade it. But it's not high probability trade. So you need to know your target, your draw of liquidity. It will not be in 4 hours, even in 15 minutes. It must be around 1 minute. So which one where I could find my draw of liquidity here? So I have one. I don't have any fair value gap here, and I have that mitigate. That order block is mitigated. So probably those. And as you can see, we have a huge fair value gap here. So probably if I want to go inside, I want to trade off of that. Okay, that's nice. And boom. Okay, I mark here. You can see, boom. This is the right. I forgot the wick. In this case, you could use the wick. But even if you don't take it like that, that's right. Yeah, it's a small. It's not like 10 hour rewards. You don't need. You need to be profitable with just 1 to 2 every day. If you are able to take 1 or 2 every day, or 1 or 1 every day consistently. Not 1 to 1. 1 to 1 for scalp. But if you are able to trade like 1 to 2 every day, you are more than profitable. You don't need to do 1 to 10 or 1 to 12 to 20. That's if you could do it, super. But you don't need to do it. You need to be consistent with everything. The trading, you cannot involve the feelings. You cannot involve your expectation. You need to be like a robot. 1 2 3 1 2 3. You need to have a good strategy. You could make like without think. It's like that. You know already, so do it. 1 2 3 1 2 3. You don't need, because if not that you start to think if this is good, if it's another probability. What my strategy say? Okay, what my strategy say? My strategy say, okay, if I am 4 hours like high time frame, I need to go from external to internal because I reach already. Okay, that's my bias, 4 hour bias. Then in 15 minutes I go against. Okay, but I know after sweep 15 minutes liquidity, probably I will have kind of reaction. Until where? Until the next what? The next liquidity. So which one is my next liquidity? I have this liquidity here. So I sweep this, I go to 1 minute, and I enter into what? This is my last liquidity here, because as you can see, we don't have any fair value gaps, important fair value gap here until this one. And what? Guess what? Boom. Probably you put here, you say, okay, 159. I don't like. I will press until 2. But this is your TP. You know what I mean? You could trade like this one. I mean, you could combine this. Okay, you have this mitigation block, or you could trade like in fair value gap. You have what? Confluence. It's a mitigation block. Actually, it's a very good mitigation block because we have this fair value gap. Also, what do you have? Short-term trade, intermediate, short-term. You have 2 fair value gaps. You have 3 fair value gaps. That's good enough. I mean, you don't need anything else. And again, if we are in 4 hours, we are here. Okay. That's my risk. I sweep this liquidity. And what I would try to expect, I would like to see the target come here to go down. Let's see. Okay. Now we sweep here. That's his opportunity. Yeah, it is. Why? Because our higher time frame, our bias, is what? Is bearish. So let's see, why not? It could trade, it could do, it could work, yeah. It could not work, yeah. But it's okay. What's the problem with that? So we sweep here, as you see. We don't have any break until here. I don't like so much because we have big reaction here, go back. So I expecting kind of this one is better for me. And then what we have? Breaker. And then now we sweep this one. I mean 15 minutes ago again. We could sweep those here, even from here. 1, 2, 3, 4. I mean this, it could make some reaction, so this is the best one. We could have some reaction here. If we sweep this, we come until here. Okay. So what? Let's see. Let's finish. Okay. Again, we sweep here. Once we enter here, I mean probably I enter here in the unicorn model. Is for me that's the best one. And my break even is around here. But even if we reach this one from here, right? And we see this one move here again. As I say, you probably take here and put your stop loss here or here. Normally the less risk is here, is 6.1 to get from here, okay? But even if you trade here and if you take off, that's okay. Now we're expecting what? Okay, let's see again what's happened. Okay, it's not the time. Let's wait here. Why? Because we are hunter, we can fail, yeah. But what do we need actually? Is to take the best one. Okay, we reached. Now we go to 4 hour again, where we are. We are here in the fair value gap. Is a chance? It could be. Let's see what's happened here. 15, we sweep. That's done for me. That's 5 for me. So you could trade this one from here. After that sweep, we have this break, and this is the break block, and you have here, no wait, in the mitigation block probably, if you have the chance. So it's gone. So let's see. After these things, I don't try to catch it here. I don't expect that reaction back because it takes like long time. And also if you come here, probably you sweep this liquidity here. So that's also, you need to know here, I mean, this is just for entry. You don't need to trade here. You want to be here all the time because this is the time frame what you want to see. So this is liquidity. Okay, I take that liquidity. So probably I don't want to go up again. Let's see what's happening here. You see, it sweep here, but does not take all night because here we have what? We have an internal price action. So here already, that's probably a target. Boom, internal price action. Because we need to what? Again, if we are bullish, if we are bearish here, and we know we come from here, we come from external to internal, we need to what? We need to be accord with that. So now we have this order block. And finally, after Asia, we have a clear movement down. We reach those here, we sweep here, and now you can say, okay, super, let's see this break. Even tapped in, okay, nothing happened, it's okay. But it's like I say, do you have any clear movement here? Well, you could try, yeah, this is a fail. Here, no. You see, you could not trade in every moment in 1 minute. You could try it, but you will lose many time before to get your target. Before to get your entry. So wait here, you see, you could trade in 15 or 5 minutes as you wish. That's the same for me. But here is your real movement. You can see again, order block. That's expansive movement, impulsive movement here. Sweep down, sweep up, and then you have the reaction. Probably, I didn't get it here. If I trade here, I didn't get it for sure because I trade over here. But even if you don't get that, you are right. That's important. Let's just imagine we take this one here and until your target. So you have movement very faster, very quickly. That's what you want. Actually, that's what you want. So that's it how you can use higher time frame with another. Better than the everything is the daily, because the daily is the daily bias. But you could combine from your higher time frame to your lower time frame is the same. So well guys, this is all for today. I will post record in the backtesting sessions. Any question right now? Yo, yo, what's up, bro? Yo, yo. So super. Again, I just want to say again, the important things here is to have your rules and your step to follow on. I mean, one, two, three, four. Because if you miss a trade, follow your rules, that's even a way to win because you be like, okay, don't worry with that. Because you know you are in the high I mean, you know, you go with the highest probability moments. So you don't need to worry about if you miss one, two, three trades today or tomorrow, or the next week, you will know if you keep follow your rules, the next week you will recover. So don't need to worry about, don't need to change another strategy, don't need to don't need to try to find another secret souls. I mean, don't need it. Just keep it on it. Keep it on it. I don't care about the strategy right now. I mean, I don't talk about the strategy right now. I talk about follow your rules. And if you lose today and you want to go against the trade, just close your laptop, go away. I mean, do something, but just follow the rule. So that's it. Okay, so guys, this is uh, this is enough for today. See you in the on Tuesday. We'll see. And any question? I am in the chat. Okay. So see you. Bye bye.